Clearly, that's what this.
So this guy's walking through a mall and he's going to teach you how to buy multifamily real estate.
It's a very interesting approach.
Going up escalators and he's moving on up. Hey everybody, how are you doing today? We want to talk to you about this guy Meet Kevin and his video about how to start buying multifamily real estate. But more specifically, we're going to get into his latest video, which is, let me get to it. Cardone Capital freezes over. Where is it at? Oh gosh. Was here.
There it is.
There it is. The freezing of Cardone Capital's Cardone Capital. He used the same word twice.
He did.
Okay. So I didn't know if I was crazy or not. So let's just play. So I watched this video the other day and I got into a little thing with Kevin. The video itself didn't feel right. And so I'm just gonna give you my reaction to the video itself and we'll just go from there. So he starts off saying, don't worry if you think this is a video to shit on Cardone and Cardone Capital, when in reality, it is a video for you to shit on Cardone and Cardone Capital. This guy's been trolling Cardone Capital and Cardone for forever. And I thought that after the lawsuit was settled or whatever, that this guy would just move on and do his thing, but Cardone's a hot topic and he's used Cardone to climb the ladder of views. So he's got a channel to help people make money. And obviously a lot of the people that are watching him are people that are interested in real estate investing, and that's great. And I think Kevin's got a lot of information. The thing is, Kevin is a real estate agent. He's a, what is it called?
A realtor.
He's a realtor, right? Because you're a realtor.
Right.
Right? You got your badge on today?
Not today, man. It's quite
what the heck, bro?
Hell of a day for me not to wear one, but.
Real estate's a vast subject, you know, and just because you're a realtor and you have experience with single family real estate, doesn't mean you know jack squat about multifamily. It's two different worlds.
That it is.
You know?
Exactly.
And the brokers that I've always dealt with that sell multifamily real estate, that's all they sell. And it's a whole different world. Like, for example, in single family, they do a 6% or 5% and they split the commission. That doesn't exist in multifamily.
That's right.
They get like a 3% usually commission and it's theirs. They have an exclusive on that property and they're not splitting it with any other brokers. Occasionally in some places you might get that, but it's rare. Where in single family, it's always the case.
Right.
You always split the commission. Somebody brings a buyer, but no, here, no. This is my property, I'm selling it. You know, I'm not splitting the commission with nobody.
Right.
And it's a whole different world of analyzing and just, it's a totally different world. So Kevin's a real estate guy, but his experience is in single family. Mm-hmm. And which is great. But when you come into multifamily and you're talking about multifamily, and I want to know, Kevin, what's your experience with multifamily? Have you had or managed a 50 unit or a 100 unit? Because the deal you're talking about here is a 500 unit, which is a whole different ball game itself that Cardone just got. So I'm gonna skip the syndication part. He's gonna talk about what a syndication is. And me personally, I don't do a syndication. We've always used our own money in our deals. But syndicators are basically people who raise funds with other people, which investors, and they give people a return on their investment. And that's what Cardone Capital is. It's
syndication program.
It's kind of like a GoFundMe, but you got real estate.
It is.
Go fund my real estate, and I'll give you some money. But in GoFundMe, you're not kicking money back, right?
Right.
So it's kind of a GoFundMe. But the topic itself, the freezing of Grant Cardone's Cardone Capital.
Right.
Okay, so it's a great catchy title because the freezing is like almost like what, his assets were frozen? Like right. I'm gonna watch this like because I want to see like all of a sudden what's going on. Did they freeze his assets? Because it's like
that's what I thought when I read it. Yeah.
But you know what the freezing of Cardone Capital is?
I'm assuming it's something that he's not perceiving.
It's the fact that he bought properties in Texas and Florida, and now he's buying something in Maryland because it's a colder climate.
Oh, okay. So it's actually a smart business.
So he's desperate. So he's freezing. So he's going into cold climates all of a sudden. He's moving out.
Okay.
So now Kevin's getting into this whole thing of like when you're looking for deals, you might start to sacrifice certain criteria. And basically Grant sacrificing his criteria because one of his criteria was to invest in like warm climates like Texas and Florida. And since now he's in Ireland, he's going into a freezing zone, and it's
where all he's doing really is expanding his
But how
portfolio,
did he milk
right?
23 minutes of that? You know, it's great.
Yeah.
He repeats himself a lot of times, but he really milks 23 minutes of this. So now Kevin breaks down the whole syndication aspect of they make money going into the deal, they make money during the deal, and then they make money on the exit strategy. Sounds like a good deal to me.
Of course, right.
You know what I mean? Like,
but there's still 18 minutes
and
left in the
he's
video,
hating
right?
on that because he's not making that kind of money.
Sure.
Now that's his point, and I did make a comment with Kevin saying, you know, you've got a valid point or two, but you obviously lack experience when it comes to multifamily. And the point he's making is that he's sacrificing criteria and going into a warmer climate because inventory is at a low. It's hard to get deals.
That's the only reason he's expanding.
Yeah, but the thing is, just like us, we went to Harrisburg. Do you think I wanted to drive an hour and a half to Harrisburg?
Not. Right. But
Who wants to go to Harrisburg, honestly, really?
But it was a smart business decision.
But that's where the deal was.
Exactly.
You
Right.
got to go where the deal is.
Right.
If the deal is there and you got 500 some units, you know, we just purchased 800 units in July. And we had to go to where the deal was. And that's what a smart real estate investor does. They go to the deal, you know? And if you don't have the deal in your neighborhood and you got to travel a little bit to get the deal,
So be it.
he's got a jet. Why not? He says, I'm not trying to compare himself to him.
Well,
there's no
you
comparison.
can't say you're not comparing yourself to someone when you name your video after them. You know, yes, you are. You know, it's.
But it's almost like he's got this big exposition, like he's gonna expose, like he's done a lot of exposed Cardone videos, and they've been good videos, I'm not gonna lie. But this one right here, when he's trying to analyze the deal of multifamily,
Right.
and the whole climate thing, like you can just tell the guy's got no experience. And it's like, if you're gonna talk about chocolate, Google chocolate, and read and write about chocolate, like at least put some chocolate in your mouth, taste the chocolate.
Or know how to make some. You know?
So look at this property, bro. This is the property here. It's A-class property.
Which is his forte, right?
So he's talking about tenants now, right? Now the tenants in this property, you're not going to get the bad tenants. This is a great area. It's near Whole Foods.
Yeah.
And it's an A-class property in an A-class neighborhood. The only thing with A-class, the danger in A-class is that when the recession comes, and it will,
Sure.
like that's the one, their A-class gets hit. But if you need, these guys got money, they need to pack their money somewhere.
Right.
If they can get a deal and they can pack their money in there, you know, and they manage it right, it's not like cash flow won't be as great maybe. So this right here, around 9 minutes and 52 seconds into it, he starts talking about people who invest in cheaper areas and buy cheaper properties and get a cheaper price and the headaches that go along with it. He says it's a terrible idea. Well, we built our whole foundation on what you call a terrible idea.
Right.
We built, I'm not even gonna brag with numbers, but people like Ben Mala have built their whole foundation on doing exactly what you're saying is a terrible idea, Kevin. So you don't know jack squat really when it comes to certain aspects of real estate. Stay in your lane, Kev, because this is not your lane, you know. And people like us who go into those neighborhoods that are bad and they're not well taken care of and invest in those neighborhoods, we're doing a great service to humanity in a way that we're helping the neighborhood come up. We're creating safe housing. We're creating housing for people who, like, you know, when we bought this building, for example, this was like a foreclosed property. You know, there was a shooting in it a month before.
Right.
You know, now look at it, it's a nice, safe place, you know?
And I worked with a lot of people, and you guys are the only people that really keep the industry, have a positive spin on things. You know, you make so much money in the real estate industry. You know, there's people who are shysters, but no, to say that's a poor decision, you know, no.
And what's the Harrisburg deal we just did with 800? What do you think that's like C class, right?
Oh, absolutely.
But what were the quality of tenants? The quality of tenants were D class tenants.
That's generous, but yeah, absolutely, yes, it was.
Not all across the board. I wouldn't talk about all the tenants, but like as far as what they were putting in there, people with $99 were able to get an apartment.
Right, and they were.
And now we're cleaning up the place, and people are like, well, I can't afford the place. Well, they should have never been, you know, rented to in the first place.
Right. There is no poor decision in investing. It's being able to anticipate and be aware of what could or could not happen. So to say that one way or another is a poor decision, that all depends on the investor.
Let's see what else this guy's got talking about.
Yeah. I think we should stop right there. This whole air quote and generalizing things all to make it more recognizable to the common viewer, that's something that, this is one of the first videos of yours that I watched fully, and the whole smoke and mirrors, it's gotta do a little bit better.
Per capita income is over 100 grand. It's like, well, it's a nice area.
Yeah, that wasn't even a good example.
But the one point that he's making is that the population is decreasing like 0.2%. And why is that? You know, that you want to invest in areas that are growing, the more popular. 0.2%. What's that?
It's barely even measurable. Yeah,
0.2%.
I can't even.
I mean, if it was 5%.
Sure. It's not even a full percent.
What's he say? What is the exact? 0.26%.
Are you grasping for straws there?
Yo, that's what I'm saying. This whole video is him fishing for stuff and acting like he's an authority on real estate when it comes to multifamily, Kev, you got no experience. You know, your video's trash. It's garbage. All right, we're gonna forward this. So there's no way we can go to 23 minutes of this. Mm-hmm. Look at this. This is where the house. This is where the property is, and this is where Whole Foods and all this is.
Yeah. To be able to skip through your video and 5 minutes up and not know what you said prior, but to see this now, it kind of just looks like you're shooting yourself in the foot. This is a well placed Type A building that I'm sure with enough capital.
Kev, you would cream to get something like this, bro.
Right.
You'd cream in your pants. So this is the one point he makes. And this is the point where after like this, I got this far into the video, I was just like, I think I turned it off. But this is halfway through the video. But he talks about the vacancy rate on the apartment complex. Now you got 531 units. Out of 531, he's saying that 31 are vacant.
Okay.
How he has the real vacancy is
right.
Based upon apartments.com.
Good one.
Real legit source.
Right.
You know, but anyway, if that's great, if that's true, I'm sure it's probably more than that. But if it's 500, if you still got 500 units occupied out of 530, that's still 94%.
Right. Even without doing the math, no one's gonna sneeze at that.
94%. See, look, if you had 50 units and 30 were vacant, you're in problem territory. If you got 100 units and 30 are empty, that's not good.
No, not at all.
If you got 200 units and 30 are empty, that's still not too good.
No, not to our standards anyway.
If you got 300 units and 30 are empty, that's not too bad. And if you got 531 units and 31 are empty, that's 94%. You know, in our industry, anything above 93% and above, we're golden. Mm-hmm. We're golden.
Especially with Type A like that.
You know, but especially with Type A. He's golden. It's golden. Like I said, the only factors that could kind of maybe affect us down the future if there's some kind of huge recession and people can't afford to rent there. But where are those guys gonna go?
Right.
Where are the people that are renting in that type of industry? Where are they gonna go? They're gonna go buy a house now all of a sudden?
No.
That's the only thing that happened before is when the thing crashed and all of a sudden houses got cheap, people left those A-class properties and they moved into houses.
Which I guess they might do, yeah, depending on their age, but yeah.
But anyway, the largest unit we've ever, like I said, we just purchased 800 units. So I think we can speak to this. That out of the 800 units, when we were cleaning the house, we had over 100 vacant. Mm-hmm. Now we're down to 75. And even at 75 vacancies, we're at 90%. And hopefully now we're going to work hard to clean up and to get those turnovers turned and increase our income, increase our NOI. You know, but that's not like all of a sudden something to be worried about. And that's what really told me when he started talking about the vacancy rate, that factor. I said, this guy has no experience.
Right.
No experience at all, especially in multifamily, and definitely not experience in a larger multifamily.
Wait, so is he claiming he has multifamily experience?
Well, he's breaking it down. He's analyzing a deal even. He's saying on here, I'm analyzing this deal. Now, first of all, to analyze the deal, you need more than just some pseudo rent roll.
Of course.
You know what I mean?
Right.
You don't. What do you have? You don't have the expenses. You don't have the income. You don't even have the taxes probably. Have you looked up the taxes?
You might know.
The taxes is the only one thing that he could look up. You don't know how much they're paying in insurance.
You might know what a T12 is. Do you think he knows what a T12 is?
He probably knows what a T12 is. The last company we made an offer to, they didn't know what a T12 was. So, but I don't know. I'm gonna wrap this up. But let's just see. Then he talks about comps, and comps are totally different in multifamily than in residential.
Yeah.
You know?
Absolutely.
And you're buying an investment property, so it's not really, the comps aren't comparable to what, okay, so somebody sold that property for, that gives you somewhat of an idea,
Sure.
but that's not going to base the price of the property. The price of the property is what that person wants as an investment and what that investment is going to produce for them.
That's it.
And the long-term, the long-term growth of how they're going to get, what they're going to get out of that
Right.
investment.
Comps don't
That's totally
definitely
different from a
fluctuate.
house. You know, houses don't increase in value
Well,
like apartments do.
Right. I think that shows too, like a little bit of lack of knowledge on your part. You know, adding comps into an important factor of it, because again, like we just said,
The only factor he has in this analysis of multifamily is the gross rent multiplier, which is important.
Sure.
It's good. It's good. It used to be, you know, like I said, he says 10 used to be a good important factor, but now
it's also one of the first things that pop up in
that's
Google
not
when
even
you
the
search.
thing. People are looking at other things now. You know, people are looking to park their money, and they were looking for long-term growth of their money, and that's why a lot of stuff today is it's overpriced, and then there's low inventory. So if Grant had to make a move to get this, you know, he made the move and he got it. Why are you salty, Kev? You know, and then all of a sudden you're gonna come across as some authority on this just so you can plug your sales course throughout the video. You know, your sales course is not going to teach anybody how to buy multifamily, and if it does, it's going to be garbage, just like your video is. Sorry to come down strong, but I think you started this. I'm not gonna get to the comments part, but
Yeah. Well.
anyway, we should end this video. I can't even.
We can.
I can't
Want to
even-
continue with that?
Let's see
that
what else.
multifamily.
Let's see if there's anything else, but. 0.2% subject to
like all these figures.
He's pulling them out his
Right,
ass.
right.
All these figures, the NOI, he doesn't know what the NOI is. He doesn't know what the cap rate is. He doesn't know what the gross rent multiplier is. He doesn't know any of this stuff. Unless you've seen the OM on it or something.
Right.
Which he doesn't even show the OM on there. If he had the OM, he'd put that in the video. He doesn't even have that.
I feel like he would know not to present a lot of this and make it seem like if he had the experience in I want to know what his experience is in multifamily and syndications and how much capital he has invested himself and what went
Dude,
through
he's got
his mind.
$6 million, right? $6 million in California is like 5 houses. Because the houses are so
Is that him or
expensive.
those syndications?
Those are houses are so expensive in California. A regular house that we pay $300 for, they're paying like $500,000 to $1 million for.
Sure.
You know, maybe it's 10 houses. I'm sorry, but 10 houses is $6 million in California.
Oh no,
You know?
No.
The East Coast is a whole different market, bro. You're sitting in California, you don't know what's going on over here. Sorry to say. So sorry to come down harsh, but you know, I made a comment on your video the other day that kind of started me. I wasn't thinking about making a reaction to any of your videos. I've never made a reaction video in my life. But when you made this comment, when I made a comment, I said, as much as, you know, I just said, even though you bring up a valid point or two, obviously you don't have much multifamily experience, especially when it comes to larger assets. You are fishing, Kev. I appreciate when people have real experience instead of setting themselves up as authorities to sell their programs. And that's what I get from this whole video. You're just setting yourself up as some kind of authority to sell your real estate program, and you need views. And your reaction to me was nice, empty comment. It's easy to say that when you point to nothing that I was wrong about. How about the fact that I accurately determined what he paid using just experience and very little local knowledge? Where did he get that from?
I don't know.
All right, well, anyway, we're glad that you figured out what he paid for it, which does nothing for your pocket, your NOI, or mine, or anybody else's. So I said, actually, Kev, I did say that you had a valid point or two, but you've never owned or managed a multifamily asset, especially one with over 300 units. Even we have 100 units assets, we have 60 unit assets, we have 300 unit assets, and now we just got the 800 unit asset. It's a whole different ballgame. Each asset class is a different ballgame. And just because you're a realtor and you have real estate knowledge doesn't mean that you have the vast gambit of real estate. You know, they're two different worlds, and that's my main point. Stay in your lane, talk about what you know about, and sell that, and inform people. But when you start coming into other people's lane, talking about stuff, and we can see that you don't know what the hell you're talking about, it's garbage, we're gonna call you out on it. Thank you for watching.